Hi guys, this is Nan from FINLIFE and today we'll be talking about Bharat Gears Limited. So this is one company which is one of the world's leaders in gear technology and is India's largest gear manufacturer. So in abbreviation it is called as BGL, the BGL company or Bharat Gears Limited. The company has modern manufacturing facilities located in Mumbai, Delhi and Pune. The company has been there and associated with the automobile sector for over 2 decades and has been growing at a good rate. Talking about the company, the market cap of the company is 140 crores. The assets in the company stand at 365 crores. So all in all, you can see the asset to market cap ratio is pretty high in the company right now. But on the other hand, the debt in the company is also at 96 crores. So little bit of assets get offset by the debt. So if we see the overall sales growth in the company from 14 to 18, the sales have increased from 419 crores to 507 crores. That has been a growth rate of approximately 5% year on year. The profitability, if we see in the company, in 2014 the company made a profit of 60 lakh rupees, which has increased to around 6.3 crore rupees in 2018 with the increase in the sales obviously. So the company has been growing at a decent rate, though this 5-year growth rate is coming out to be pretty massive, but for calculations we'll take the growth rate at a rate of 20% itself. The earning per share in 2014 was at 0.676, which has increased to around 7.47 in 2018. We are expecting that the company will continuously keep on growing, and since obviously the demand for the vehicles are always robust, whether the whole industry of the automobile sector changes to, let's say, electric car also, but still the bearings and the gears that are made by the company, they will definitely be still used. So if you see the growth rate at the rate of 20%, we can expect that the future earning per share of 2023 of the stock will come out to be 19.26. So currently in 2018 it came out to be 7.74. In 2019 we expect it to be 9.29. And over the next coming 5 years we are expecting that the new earning per share will increase to 19.26. Moving forward, we can see that the price of the stock has been soaring pretty massively and has reached the current level of the stock has been 147 rupees approximately. The resistance of the stock was at 180 rupees and the nearest support stands at 138 rupees. Overall, if we see and we try to extrapolate and find out the future growth rates of the stock by doing calculation that the current PE only of 19.24, which is the current PE, we can see that the stock can deliver returns up to 20% over the next 5 years, year on year. So every year you will be able to see your money grow by 20%. So for example, the first year, let's say in 2019 you are investing and you are investing, let's say buying one share at 148 rupees or 150 rupees, you will see that price growing from 150 rupees by 20% to 180 rupees. Then 180 rupees will again grow by 20%. So this is how it will continuously keep on growing up. So at the current PE of 19.24, we can expect that the future price of the stock is expected to be somewhere around 370 rupees over the next 5 years. So obviously your price will get more than doubled in the next 5 years and yield you approximately 20% returns year on year. If we talk about the auditors in the company, Deloitte, Haskins and Sells is the auditor of the company. So on the ethical front also we can see that the company will fare pretty well, because obviously if you have good auditors, that definitely adds up to the image of the company on the ethical front. Talking about the return on net worth and the capital employed, you can see the return on net worth numbers on the screen, that the company has been growing and has been doing pretty well. And since in 2018 itself, the company got a good profit number and the margins were around 1.24%, which is still very less. The margins in the company is very less, but if the company tends to improve its operational efficiency, then the company can fare pretty well. So you can see the return on net worth and capital employed numbers also, though they are not very robust and good, but they are not even so bad. Talking about the cash flows, operating, investing and financing cash flows, you can even see it on the screen that the company did pick up a little bit of loan also in the year 2018 itself, obviously for working capital and expansion needs. Further, the managing director and the chairman in the company is Surinder P. Kanwar, and the mutual fund and institutional holding, if you see, it stands at 0.2%, which is very less, and that does not really help us motivate to invest in the stock. But overall, the returns, if we see, we are expecting that it can definitely yield up to around 20% returns year on year, which is a pretty good number as compared to the FD returns of around 6.5% year on year. That too with a tax bracket of particularly the tax slab which you are falling into. And obviously in stocks, when you're investing on a long term view, you will definitely just have to pay only 10% taxes on the profits that you make. Further, the company is looking pretty good, and that is what I wanted to explain about the company. Further, you can even check out our Udemy course, and we are giving all the viewers, we are giving you a gift and a bonus tip that you can check out our course, and we are providing a free link here. So it's on a first come first serve basis. Only first 20 members will be able to join the course, and we would definitely like you to guys to give good reviews, and reviews particularly. If there are any improvements in the course, we will definitely come up and do the improvements. Further, I think you guys will learn a lot, and we are particularly sharing some more insights in the course which are different from the videos that we are making, so that'll be extremely helpful, and the code will be mentioned on the screen. And that's about it for this video. If you've not yet subscribed, please click on the subscribe button and the bell icon so that you keep on receiving such wonderful videos on stocks, and you keep on getting new stocks. Further, one thing which I missed out in the video was that the forward PE, if you want to check out, which is usually done by research reports and other research companies. Majorly, if you want to see the forward PE method, and if you want to calculate the forward PE from 2019 to 23, you can see how the forward PE will be running in the company. And in 2019, we can expect that the forward PE will be 16. The current PE is at 19.24. And we can expect by 2023 the forward PE that we are expecting is 7.73. So overall, we can, on that front also, we are expecting the stock to rise. So that's about it for this video. Keep liking and sharing. Signing off, Siddhant Goel from FinLife.